caught up with the management of HCL Tech and asked them to decode their first quarter earnings and margin guidance. Let's listen into that conversation.
First of all, if you look at our performance, 6.5% sequential growth, or even if you look at it on a last 12-month basis, 10.7%, really is based on our strong foundation in different areas. So if you look at application services grew 2.3% in this quarter. Of course, infrastructure grew by a phenomenal 17% plus this quarter. I think Volvo did have an impact, but overall, the business grew by about 10% from organic business.
So organic revenues are up 10% on a year.
Absolutely.
Infrastructure services.
In infrastructure services.
No, and on the whole, if you could just give us a breakup of organic.
Someone will have to compute that. Someone will have to compute that. But I think largely the story was about an overall performance. The organic portfolio in different lines of business was very strong. If you look at even in infrastructure services, right? With the 17% growth, 10% of that came from organic, so you can compute the balance.
Okay. So just to revisit the point again, when you acquired Volvo, it had annual revenues of $190 million. It was operational, integrated, effective 1st of April. So on a quarterly basis, it can potentially contribute $47.5 million. I'm not even assuming any increase in revenues. Would the number be more or less than that? If you could at least...
The number has been lower than that.
Lower than 47.
That's correct. Because this business will have projects.
Okay. So Okay. With respect to the guidance of 12 to 14%, if you could then tell us how much you're expecting in terms of organic and how much will come in inorganically?
I don't think we're breaking it up between different lines. No, I don't think we're breaking. I think the key thing is that what we're looking at is our order book is very strong, right? Fundamentally, the order book is very strong, and that is giving the confidence in whatever the number is. I think secondly, it is more important is the market has a little bit of volatility in what the outlook could be. So instead of trying to confuse that with TCV wins and TCP computation, we kind of took a view and a decision that it's better to be a little bit more prescriptive on what the outlook will be.
Okay. Anil, great performance in the margins, 20.6 versus 20.8. Can you tell us how you managed to manage the margins? What was the impact on account of Visa? What was the hit because of Volvo? What were the levers that helped you maintain your margins?
Sure. So I think on the whole, it has been an increased adoption of dry ice automation platform, number one. Number two has been the increased offshoring. These two factors in general have helped us, and this is typically associated with any large deal, which in the initial phases will have a lower margin. And as the execution takes place over a period of 1.5 to 2 years, it comes back to the company level margins. We didn't have any significant or meaningful visa impact because we as a company are not dependent upon visas. If you look at the visa, less than 50% of our people in the US will be visa dependent.
Okay. And any hit on account of Volvo, because that is expected to be margin dilutive?
Yeah, so it bakes in that hit in the sense it has not been negative, it has been positive.
Oh, so you haven't lost on your margins on account of
We did lose on the margins because the margin there is lower than the margin overall
so
company
how much?
Margin. We can't be deal specific in terms of margins because it's sort of it's a combination of all the businesses we run. So, however, it will take the same trajectory as any other deal will take.
Okay, I'll come back to the margin guidance. Let me just put in a question for Mr. Vijay Kumar. If I look at the service lines, growth once again for the company has been driven purely by infrastructure management services, 16.5% in constant currency. Application growth is quite middling at 1.9. Business services, it's a small component, only 5%, but it's a negative growth. What is going to be the growth focus for the company from here on?
Yeah, first, just let me clarify. On the business services, it was primarily due to one client who decided to insource due to regulatory reasons. And that's one client is impacted as in business services. It's impacted in financial services as well as North America numbers. 1.9% quarter-on-quarter growth in application services is again, if you look at the last few quarters, this is the best